guest as well.
We have a special guest this morning. Hi, how you doing?
I'm fine. Good morning. Good morning.
Omoyusi Temitope. Yes, correct?
Yeah, you're right.
Welcome.
Thank you.
Our special guest, investment strategist at Afrinvest. Welcome to the show. Please join the conversation, everyone. Send messages to WhatsApp 0809 444 0981. 0809 444 0981. We're also live on YouTube, so you can watch and leave a comment on that platform, as well as Twitter at Smooth981FM with the hashtag BusinessExpress981.
Yes, indeed. So what we'll be talking about with Omoyusi Temitope, who is an investment strategist with Afrinvest, about the IMF's revised forecast for not only Nigerians around the globe. They revised their forecast around the world, but we'll be focusing on Nigeria specifically. So Omoyusi, what was the revised forecast from the IMF for Nigeria for, I guess, 2021?
Okay, thank you. The IMF actually put Nigeria economic growth forecast for 2021 to 2.5%, and that was from 1.5% that was actually predicted in January. And you know, these reasons are not actually far-fetched. You get, because for last year, 2020, the IMF actually predicted that Nigeria economy would dip by 3.2%, right? But at the end of the day, we had about 1.9% decline. So as a result of what we saw in the fourth quarter, when the economy grew by 0.1%, and we knew that Nigeria exited the recession. On the back of all of that, you know, even vaccination, especially, you know, vaccination has actually increased the momentum compared to January. For instance, in January, you know, Israel particularly vaccinated just about 30% of its population. That was when IMF did the initial forecast. But now the country has actually vaccinated over 93% of our population. Same with the US. You know, US, I think, vaccinated just about 7% of our population in January when the initial forecast was done for 2021. But currently, US is hitting 40%, and you know the momentum is very high, especially because, you know, we have more vaccines from Pfizer, BioNTech, you have J&J. And I think I even read a report that was about 2 months ago from The Economist. They actually predicted that Africans won't even get vaccine until 2022. But thankfully, Nigeria already has 4 million, although we'll say that that is quite small compared to a population of over 200 million people. But it's still quite positive, because a country that, or a continent that was already written off from the outset, now getting, you know, at least some level of vaccination, maybe South Africa and a number of African countries, is positive. So on the back of all of that, I think that was what brought about this revised version of the forecast. And again, you know, the sentiment is also telling on the global market. You see what we are seeing to the oil market, what we are seeing in the global equities market, and what we are seeing even in the policy. So everything is still around just improvement in vaccination. Thank you.
Thank you for that, Omoyusi. Some have said that the revised GDP estimates from the IMF are overly optimistic. Well, what do you make of that sentiment?
Well, saying that the GDP figure, especially for Nigeria, is overly optimistic, well, I might want to disagree with that, because we also didn't expect that the economy will see recession, you know, exited recession in Q4. So for us to have been able to achieve that, I think 2.5% for 2021 is not far-fetched at all. It's not like overly optimistic, because, you know, even in Q1, we saw that oil prices went as high as $70 US per barrel. That was on the back of, you know, sentiment around the fact that economic activity is coming back to normalcy. And, you know, even the OPEC, you know, because Nigeria economy will still depend largely on oil. OPEC actually predicted that in Q3 and Q4, oil demand will consolidate significantly. And if you can remember very well, I think the meeting OPEC had on April 1st, they actually speculated that they are going to increase production. And they wouldn't want to do that if they know that there's a threat on the horizon. It's because they already know that economic activity is coming back to normalcy. For example, the aviation sector that bad hit by the pandemic is also coming back. For example, for instance, the number of people screened, the number of travelers screened has actually increased significantly. And if you look at the labor market as well in the US, it's really doing very good. So all of these factors are telling on oil prices, and it's also positive for Nigeria. So basically, you would say that it's not too optimistic. And I can tell you for a fact that unemployment rate that we saw in Q4 will see a lesser figure in Q1 2021, although that might not be below the WDU we are seeing, maybe around 29% or 30%, but you see some moderation in unemployment. And all of these are traceable to what we are seeing in the oil markets.
Great stuff. But we still are lagging population growth. That estimate of 2.5. It still lags population growth. So what do you make of the population argument?
Well, that's a challenge actually, because looking at population growth at 2.6%, and we are projecting that the economy will grow by 2.5% in 2021. It's a challenge because you are saying that the level of productivity will be less than the rate of increase in number of people. It's more like saying that the increase in your population will be constrained by resources, or the number of people will not have enough resources to fulfill their potential. That's what we are saying. That's actually bad. The implication of that, if you cannot fulfill your potential, definitely there'll be a lot of crime, social vices, and that's what we are currently seeing. So basically, in economics, we call that less inclusive growth. If growth is not inclusive, then it's a challenge for the economy. It's not even good for government policy as well. And the essence of fiscal policy, monetary policy is the welfare and not GDP. That's why there has been a lot of argument around the fact that GDP is not the true reflection of people's welfare. Even per capita income is not a good reflection, because half of the economy might just be to one sector, or might just even be to one person, or just very few people in the economy. Do you get? So the question is, what is the position of inequality? So if there's increase in economic growth, how many people are benefiting from this growth? Is it that the growth is just getting to few sectors of the economy? So this is why in economic balance, we always emphasize the importance of balanced growth. Balanced growth is that we want every economy, every major sectors of the economy to be developed at the same time, so that it's not that the economy, we are only benefiting from oil sector, and manufacturing sector is lagging, or financial sector is helping the economy while mining and quarry is lagging, or entertainment is lagging while a few sectors is growing. So the basic thing is addressing inequality, because GDP cannot reflect inequality. It's possible for GDP to go, and the growth will just be for specific people. It's quite evident in Q4 when we saw 0.11% growth in GDP and unemployment increased to 33%. So it's not all about just growth, but we want an inclusive growth that is that absorb the unemployed. Thank you.
That's interesting. Actually, very important aspects to consider, because it contributes to how the country would recover after post-COVID, because that's really what the IMF is looking at in terms of how many countries are going to be able to come back and stand afloat after this COVID. Now, Benga Kamu sent the message on WhatsApp. It says, I believe the growing insecurity in the country may affect the optimism of this IMF forecast. That's combined with economic factors.
Mm-hmm. Yeah,
I agree.
Yeah, very right.
Very true. Omoyusi, there was very quickly. There was a debate going on Twitter where somebody posted year-on-year growth in steel, and which I think was 35% growth, and then year-on-year growth in cement, which was up 35%, and then year-on-year growth in steel per ton, which is about 62%. Someone there responded and saying, well, no, the increase in steel prices has nothing to do with the inflation, and it's really the cost of steel on the international market, where I think China has been driving up iron ore prices. I wanted to get your thoughts on that argument and whether or not you can dismiss exchange rate pressure on inflation in the country.
Okay, so I would like to look at that from two angles. One, it's very right if the person is talking about the fact that international price for steel has gone up. But if the person is a domestic importer, then you can be immune against exchange rate challenges. And it is very important to know that inflation has a pass-through effect on exchange rates and imported commodities. For instance, there's what we call law of one price or purchasing power parity. The illustration is when inflation in Nigeria is increasing faster than what you have in the US, we have to adjust our exchange rate to reflect the inflation rate differentials. So whatever is affecting inflation in Nigeria, we affect exchange rate, and definitely it will take a negative toll on imported raw material, which still is not an exception. So for the person to say it's not all about inflation and exchange rate, well, that is just one side of the story. You might say that international oil price will affect the landing cost, but you don't import in Naira, you get dollar to import raw material. So as inflation is moving up, and you are having slower pace of inflation rate in advanced countries, the inflation rate differential and its impact on exchange rate will continue to take a toll on steel importation. So inflation is actually very consequential on imported raw material, which still is not an exception. Thank you.
Great stuff. Great stuff. Val, what we got? About 2 minutes?
Yeah, thereabout.
Okay, real quick, Omoyusi, you only have 2 minutes to go. What do I want to ask you again? How do we, as far as getting GDP growth, well, you already talked about balanced growth. You already answered that question I was about to ask. The informal sector, quickly, if you can, in about a minute, how can we get the informal sector into the formal sector so they can be appropriately taxed?
Okay, I think for me, getting the informal sector into the formal sector, or I can put it differently, formalizing the informal sector is very critical to the economy, because the more informal sector you have, the more section of the economy that is outside the purview of the government. So the most important thing is that we have to make formal sector attractive by addressing the challenges to ease of doing business. These are very critical, because as at 2014, that was the latest report by this MBS on the size of the informal sector is about 45%. And with what we have now, I'm sure the informal sector is well over 50%. So when we address these challenges, the challenges of ease of doing business include you have the regulation, you have get access to electricity, the condition of electricity, you have legal environment, you have access to credit, you have registration of business, you have protection of investor. Are you able to protect investor? So all of these factors, if you make them easy, then people will move from informal business to formal businesses, and it's a win-win for the government and even the people, because government will create more jobs, and government will create more jobs, or private sector will create more jobs, and go get more revenue. So there'll even be less pressure on fiscal policy. Currently, Nigeria is having a problem that we call twin deficit. Twin deficit is when you have fiscal deficit and current account deficit, and the problem with that is that in the long run, or in the next 5-10 years, taxes will be increased, meaning our current consumption, our current debt will be passed to future generation, where I'm not sure our children will be happy with us when they feel that we have consumed so much in 2021 and they're going to pay for all of this in 2025. So it's very important to formalize the informal sector so that government can get more money to cover for the shortfall in budget. Thank you.
Thank you so much for that, because I don't remember ever seeing a hungry child smile. Really, have you, Rotus? Or Temitope? Thank you so much. Quick messages here. Frank says, good morning, Rotus. I don't understand that question, though. Instead of asking how to grow the informal sector, you're concerned about taxing them. There's God, though. And then Gwenga Kamu says, inclusive growth. Is that not trader money in Nigeria?
Gwenga has started. He has started.
Yeah. Well, thank you so much. Omoyusi, Temitope, Matthew, thank you for being a guest on this show.
You're welcome.
Investment strategist at Afrinvest. Rotus, thank you so much. Have a
Thanks,
lovely
Val.
day.
Thank you, Val.
Yeah.